Now, Minister, we're in the midst of the coronavirus pandemic, of course, and the theme of our conference in Indonesia this time around is assessing the coronavirus pandemic and what it means for the economy and the outlook for Indonesia. So how do you see the macro economy being hit by the coronavirus in Indonesia, and how do you see the outlook?
Well, first, corona, which is affecting the whole world, is also affecting Indonesia. It is started as a health issue and still a health challenge everywhere, but it's now have the wider implications socially and economically and financially. So for Indonesia, it's no exception. We also saw since the pandemic declared coronavirus by WHO in March, we see that the implication on the social and economic is very significant. We are expecting that the economic activity will be affected most on the second quarter of this year, because that was the time that Indonesia adopting a strict social restriction, as well as all the economic activity has been halved in a significant way. So while the first quarter we have 2.97% growth, which is close to 3%, still relatively good, but that is really indicating that COVID is going to affect very significantly. So the second quarter, we will expect a negative growth because of a full quarter we are implementing a very strict social restriction and economic activity restriction. With that in mind, the government is trying very hard now on a third quarter to accelerate a lot of the program, including increasing budget deficit on our fiscal side to rebuilding and in this case recovery the economy in a much more significant way. So the whole focus of the government now really to implement this budget with that, and as well as careful continue protecting the people because of this COVID is still increasing in many areas of Indonesia. We try to balance between the health concern and the health protocol with recovery of the economic and social activity. I think if the scenario moving well and we are really want to make sure that is the case, then the second and the third quarter and the last quarter of this year hopefully is going to recover in a positive zone. With that in mind, although I think we are all having a difficulty to make a projection on the economy, because we never know whether the COVID is going to have a second wave, whether this is going to make a certain activity will be closed again. But with all this restriction and constraint, we are still hoping that for Indonesia, over a year, we are going to maintain the growth rate just between 0 and 0.5%, slightly above 0, meaning that on the third and the fourth quarter, we have to accelerate the recovery.
It would be remarkable if you're able to eke out some positive growth. We do expect a bounce back next year, assuming the virus in Indonesia and the region is under control. But some of it is a technical rebound because of the low base effect. But thank you for that outlook. Now, you referred a moment ago to the fiscal response. That's something we're really keen to hear your thoughts on. So you had a 3% deficit cap for this year in the medium term, which earlier this year you abandoned in view of the crisis, and you're now aiming for minus 6.34% deficit this year. Could you tell us what the fiscal response is designed to do, and what kinds of programs are being set up to help households and SMEs and larger businesses?
As you know very well that Indonesia have a fiscal discipline rule of maximum deficit of 3%, which is adopted now almost 20 years. That created a good, strong macro policy reputation for Indonesia. That is, we will stay prudent in order for us to be able to create a sustainable of the economic activity or growth without jeopardizing the macroprudential policy. COVID changed dramatically. Our outlook on the fiscal side, of course, it will hit our revenue very significantly. Our estimation is between 10 to even 12%. And then on the spending side, it increased dramatically because of the health response, social safety net that we have to provide for the lowest 40% of the bottom household in Indonesia, those who's now unemployed, hit by the COVID, and also for us to make sure that we are going to support small, medium enterprises because different from the global financial crisis 2008, 2009, or our financial crisis in 97, 98, this COVID is really damaging the grassroots activity because of the restriction on the social movement and economic activity at the grassroots level. And that's why government really providing a lot of support for the household and small medium enterprises. Our deficit has been widened by 6.34. Actually, initially in June, we are still designing at 5.04%. And now we are increased to 6.34%. So we revised twice on our current budget. And we allow to do that because we have a special law during this emergency situation because of COVID to have a 3 years allowance for the government to have deficit above 3%. Our thinking at that time is designing this fiscal response because of this COVID is that the 2020 is going to be the hardest hit for the economy as well as social. But we are not underestimating the 2021 of the recovery, which is still also very uncertain, whether we are going to have a antivirus or vaccine, whether the whole economic activity will be actually restored to normal. I think that kind of uncertainty still need to be considered at the 2021. So we provided 3 years times of recovery from this COVID. Some will say that this is too short, but I think we are very optimistic. So with that increasing deficit, it's actually a combine of two things. The revenue dropped because of the economic activity of the taxpayer really decreasing very significantly. And the expenditure increased for us to protect people from the health threat, from the social safety net, and also to recover the economy. So our design of the fiscal is actually a combination between a health response and also for the support small, medium enterprises, and then support for the banking system or financial system and corporation. Then also support for the sectoral and regional government activity in order for them to be able to stimulate the economy again. The total of the COVID response is 697 trillion. And as I said earlier, the deficit is then widened into 6.34%. The challenge for Indonesia is not the fiscal policy design. The challenge for us is the implementation. Why? Because of two things. First, this is really the first year of the cabinet. Although this is the second term of President Jokowi, but many of the minister is actually a new minister. So they are actually still in the process of really understanding the way the government works. And then we hit by the crisis, by this COVID. Then we also changed the design of the budget very fundamentally because of this COVID. So this triple thing is going to affect the implementation challenge for us. That's why President now focusing not on the bigger picture of how big is the deficit, but how much you really can really spend. And this is the spending effort is actually the one that we are now focusing.
One of the positive things about Indonesia from a rating perspective is that you entered the crisis with a low public debt ratio. In 2019, public debt to GDP was just 30%. That's well below the BBB median, which was well above 40%. Now everybody's debt load is rising, so that median BBB debt ratio is going to go up this year, and by our projection, you'll still stay under the triple B median. So, from a rating perspective, the good news is there seems to be some room for this stepped up fiscal expansion. But one of the important things is you're very focused on returning to that medium-term 3% deficit target and getting the debt down over time. How can you move from a deficit of over 6% this year down to 3% in 2023? What are the plans to get back there?
Well, first, we really have to look at the whole structure of the budget of Indonesia, and being a veteran Minister of Finance gave me a lot of advantage, of course. Then we know exactly where the area that we can push and where area that this is not only a problem of money spending, but really the capacity or other, for example, like governance. So we really have to be very careful to really design it. So we are aiming for lower than 6.34, but still supporting enough. We just actually discussed with the parliament, the initial top is actually at 4.17%. But now, given the uncertainty and as well as many of what you call it projection, which is revised down for 2020, we are now widening, and President just deciding yesterday about ability to widen the deficit for next year at the level of around 5.2%. This is lower enough from the 6.3 this year, but actually high enough to still support the recovery. And then we are aiming for 2022, which is maybe around 4. Then at the 2023, we are going back to the maximum 3%. I think this is what we call it the medium-term plan. For us, it's important because we will provide a signal for ourselves, for the government, that we really have to be disciplined, using the fiscal deficit in the most productive way. It is not an easy way out for you, for everybody, to just spend money more through debt. You really have to make sure that the spending should be much more productive than the cost of debt. And that's why the quality of spending is going to be very important. The second one is actually also to provide a signal for the government as well as to the market that the government, if you want to have a growth recovery, should not through only fiscal deficit, or in this case, even more stronger, the signal, if you want to grow faster and higher, it should be through reform. And that's why our reform program, including the omnibus law on investment climate, job creation, will still continue to be discussed with the parliament. And we still continue hoping that this is going to be passed this year, so that next year we are going to have fiscal deficit which is still supportive, but then the reform which is going to be even more accelerated in providing a good investment climate. That will hopefully then restore and recover the confidence on the investment activity and also on the consumption. So that is going to be the healthier growth rather than actually rely on a fiscal deficit.
One of the financing mechanisms for this wider deficit is a degree of debt monetization with Bank Indonesia and a burden sharing arrangement over the interest cost. This is, to be frank, concerned a lot of investors because it suggests the risk of a loss of fiscal or monetary discipline, which you've emphasized. So how should investors view this arrangement with Bank Indonesia, and how can you ensure them that the risks will be contained going forward?
Well, first, we are very clear, Steve, that this is not our government man-made situation. This is a COVID, which is an extraordinary shock everywhere, all over the world. So this is not something that we are hoping, that we are not making, and we are designing. And what we call it, the magnitude as well as the order of the extraordinary is just really real. I mean, you just see many countries in the world, even the advanced country, they really, really struggle to deal with this COVID, with the implication which is very significant on the economic side, on the livelihood of the people, and on the safety of the people, even in this case, and then the continuity of the business. So this is a real threat. So the focus today for all countries in the world is how to save people and how you are going to save the economy. it doesn't mean that then you are giving up all the good policy framework or even discipline. But this is really the safety of the people and the safety of the economy is the utmost important at this very moment. Now, looking at the Indonesian situation, and I said, we widened the deficit because of the two things. The revenue dropped because of the economic is stopped, and also the spending increase. And this is extraordinary time because it is not that the revenue dropped because the government doesn't want to collect tax, or this is not because that we are spending more because we want to actually having a big party. It's not. But this is really something which is necessity for us to be able to respond. Now, with the 6.34% combined with even on the bond market, capital market, or financial market in general, which is very panicked during the pandemic announcement that is March and April, in which the market totally volatile, or I think many people witnessing is almost like collapse, even more scarier than 2008, 2009. I think the unpredictability and this volatility of the bond market, financial market, as well as stock market, creating additional risk to what is already become an extraordinary risk to us. So this kind of arrangement with the central bank for Indonesia, which is maybe for many countries already adopting even more, in the advanced country, I think the debt monetization in Europe, in the United States, and in Japan, I think it's already known. For Indonesia, this is extraordinary. That's why we are very careful in managing this situation, unprecedented for us. We are carefully first discussing between Ministry of Finance and Central Bank governor. And in order for us to be able to then formulating what is the right and justified way in responding to this crisis. With this widening deficit, we have to actually get the more than 900 trillion additional financing. And that should be absorbed within less than 8 months because we start this in April, right? When the market is also very volatile, then it is just justified to ask Bank Indonesia to become a standby buyer. So the first agreement between Minister of Finance and Central Bank is actually try to calm down the bond market. Because if it is not that, it can have a spillover effect to many. By actually allowing Bank Indonesia to become a standby buyer, and they are participating through the market mechanism. So we issue bonds every 2 weeks, and then in this case, then Bank Indonesia will become a standby buyer if we are aiming for a certain target that cannot be absorbed by the market. They can enter through the green shoe or private placement. Then we also see that the increasing deficit cannot be justified combined with the increasing interest rate, which is actually the risk is coming because of this COVID. And that's why we have one-off arrangement with the Bank Indonesia that for deficit which is driven by this public safety and public goods program that is on a health, on a social safety net, as well as to improve the local government to support on a COVID-related and economic recovery. We are getting what we call it, all the interest rate will be borne by the Bank Indonesia. And this is through private placement, only one-off because of this year extraordinary situation. The rest of others activity, which is creating the spending for the small, medium enterprises, for the corporation, this is going to be through market mechanism, that is the bond issued in the market, and Bank Indonesia will become, as I said, standby buyer, but also for this specific program, Bank Indonesia will add more, what you call it, support for the fiscal side by bearing the cost from the market rate into 1% below the reverse repo. But this is only for the small, medium enterprises and corporation. So with that, we are allowing to explain to the market why we do this and what justify a certain extraordinary action taken by both Ministry of Finance as well as Central Bank. But this is not going to be continue forever because this is happened because of the COVID. That's why we have a very clear exit strategy. For the fiscal, the exit strategy is that we will continue to do and to play the role on the fiscal side to catalytic and to accelerate the recovery. Then we are going to continue going to the discipline of the fiscal side below 3% by the year of 2023. And the arrangement with Bank Indonesia is going to be on a very exceptional financing from Bank Indonesia. It's only one-off for 2020, but the rest is going to go through market mechanism. So it will create a discipline for both sides. For the monetary side, Bank Indonesia is also have a clarity that their focus on maintaining stability, both on inflation as well as exchange rate, is becoming the utmost important. But certainly, we want to see the recovery of the economy, because there is no way that you want to have stability when the economy is actually declining very sharply. So this is what we are trying to signal and providing a guidance for the market, so that this, what you call it, Bank Indonesia financing participation on the debt of the government is not going to damage and jeopardize our macroeconomic framework, which is hard-earned, and it's also very important to become one of the foundation for the economic today as well as in the future.
One of the constraints, I guess, that you face in widening the deficit is the low revenue ratio. At 14% of GDP, Indonesia's revenue is very low by any global standard, one of the lowest of any country we rate. So what it means is you've got constitutionally mandated spending on 20% of your budget is required to go to education, for example. So it means that in an environment like this, if your interest cost rises, you begin to crowd out spending and lose some of your spending flexibility. So it would seem to be more important than ever now to get that ratio up over the medium term. Can you update us on progress? This has been an initiative of yours for many years now. How do you think you're doing on that, and what are some of the initiatives going forward?
The tax reform is going to be still continue the core program for the Ministry of Finance. And we've identified what is not adequately built in the system and business process within the tax department in order for them to be able to actually managing this task of revenue collection from the registration of the taxpayer up to their payment of the tax, as well as if there is a dispute settlement, and then how we are going to settle. This process is actually not yet become one integrated process. And that's why the reform today, different from a decade ago when I was first time as a finance minister, 10 years ago, my focus is on the corruption, on the conduct, on the unruly behavior which is coming from the situation. Today, we have at least more or less the organization which is in place, but then we identify that this kind of system to support one integrated services from the registration, payment, dispute settlement, and on a liability or ability to recover the tax is going to be one of the most important. And that's why we're building the database, we are building the IT system which is going to allow us to do that. That is also using the standard internationally adopted by many countries who has a better tax ratio. Second one, I also not only focus on a tax, because our revenue is only coming from the excise, customs, as well as from the non-tax revenue. Indonesia have what you call it natural resources, in which the revenue coming from royalty and non-tax activity is actually quite significant, including the dividend of our state-owned enterprises. So we are now also combining this to become the revenue collection effort. So that's why for taxpayer who have the obligation to pay tax, they also sometimes have also the obligation to pay the non-tax obligation for the government. They have a one certainty, one services. This is what we try to do in order for us to have a more synchronized, harmonized approach for the taxpayer, and at the same time certainty for us in terms of the collection. This is going to be still the most important priority for us. And now we're also moving to digital economy. So that's why we're also revising our article on the taxation in order for us to be able to collect the digital tax for Indonesia, both value-added tax, which is now important, as well as the income tax. The income tax is still subject to the discussion in the G20, especially for those company with a digital company which is operating worldwide. But we will continue making sure that we will do that. And then other thing that we've already adopting since the tax amnesty and then the requirement or obligation for the financial system in Indonesia to report the access of the tax department to be able to get the access on the financial system is now already in place. So in short, we've already have a more or less foundation, and we will build based on this foundation to have a better revenue collection, both on the tax and the non-tax revenue. I think this is going to be one of the most important for us to be able to prove that Indonesia will collect, which, as you said, if we want to have a much more ability to finance our spending, that it should go through tax rather than actually or revenue collection rather than from the debt. But with that in mind, just to remind that because we know that the tax revenue and revenue collection is still constrained, that's why in designing our fiscal, we are not going to then allow to have a spending which is unproductive. This is becoming one of the obligations, and that's why you will see that Indonesia still have a debt to GDP ratio which is maintained relatively very low because we are very careful in maintaining and managing our fiscal design.
Okay, well, on that note, we'll let you get back to your work. You have a lot to do. Difficult time, but also some opportunities as you described. So, Minister, once again, on behalf of Fitch Ratings and our audience, I'd like to thank you for your time today and wish you all the success. Terima kasih.
Thank you. Terima kasih. Thank you, Steve.